Welcome to Questioning the Manager. Today we are joined by Job Curtis, Fund Manager of the City of London Investment Trust, which invests mainly in UK large companies. Job, thank you for joining us. There was a market wobble about 1 month into the new year. How did the Trust's assets perform through this period?
Well, we are an equity-related investment trust, so we are invested in the stock market, so obviously we are affected. But we look at shares from a total return perspective, so both from capital and income. And actually, it's been a good dividend season for companies with their corporate results. And so, we've enjoyed some good dividends coming in. And I think by looking at both at dividends and capital, it enables you to be paid while you wait, and then you can enjoy the income and obviously look through some of the short-term volatility in the stock market.
About 90% of the portfolio's assets are weighted in the UK. Where are you finding the best opportunities in the UK market relative to market cap and sector?
Well, it's a fairly diversified portfolio that we have, and so we have a range of opportunities. And if you look in our top 10 holdings, you'll see we've got Shell and BP from the oil sector. We've also got banks like HSBC and Lloyds, and we have consumer staples companies like Diageo and Unilever. So it's a fairly diversified portfolio. One area we continue to like are UK house builders, and Taylor Wimpey is not in our top 10, but it's our biggest holding in the house building sector, and it's a nationwide house builder, and we see demand holding up for new housing. There's a lot of people who are renting want to buy, and Taylor Wimpey's got a very strong balance sheet and a long land bank. And another company to mention is RELX, the publisher, which is now largely online, and that is in our top 10 holdings and a growth stock that we've got a lot of confidence in going forward.
There is a general consensus building that the worst of Brexit is now priced into UK equities. Would you agree with this notion, and what are your expectations for the UK market for the remainder of 2018?
I think it's very hard to answer that question because no one really knows what's going to happen with Brexit. I mean, it's still a lot of uncertainty over Brexit, but it's fair to say that since the referendum, the economy has performed a lot better than some people feared, and also that some of the domestic stocks in the UK market have been adversely affected by the uncertainty over Brexit and the general political uncertainty going forward. And the stock market does discount future events, so to an extent it is reflected in current share prices. But I think unless you've got sort of perfect foresight, which of course no one does, I think it's very hard to really give an answer to that exact question. But the UK stock market is very international, and most of the companies are maybe listed in the London Stock Exchange, but actually very global by nature. It's certainly true of City of London's portfolio. And so, to the extent that Brexit has an effect on the UK, it will be less muted, be more muted on the stock market overall because of the global nature of so many of the UK listed companies.
Job, it's been an absolute pleasure. Thank you for your time.
Thank you.